Good evening. This is Ken Long from Tortoise Capital with a review of a number of short case studies from the week of August 8th to the 12th. That's a Thursday, Friday, and a Monday. We're going to take a look at a variety of techniques just to get a sense of what a couple, 2 or 3 days in the tortoise style of trading looks like. First one we're going to start off is August 8th, managing a routine volatility trade. And so this one is in VXX, the volatility ETF. I'll just comment one time on the chart setup, and then I won't cover those again. The dark blue shaded area is the 30-period Bollinger Band plus or minus 1 standard deviation, or the river. Thick red line in the middle is the Bollinger Band mean, the center point of the river. The lighter shaded blue area outside is the 30-period Bollinger Band plus or minus 2 standard deviations. See that here. This orange line looks like a ribbon. That's a 2-period Bollinger Band on price. Think of that as the real price. I find it interesting when there are long wicks outside of that 2-period Bollinger Band. The dark blue line is the 10-period regression line, the moving linear regression line. That's a pretty good proxy for price. It's pretty adaptive, as you notice. The thick black line is the 30-period regression line, the moving regression line. The green is the 90-period. This orange is a version of the 200-period moving average. It's the average of the high, low, and close. So it's like a 200-period pivot point moving average. I've been experimenting with that one. Vertical blue lines are when I'm stalking. In this case, it was right after the close, so this is right at the open, essentially. Green circles are my entries. Red lines are my stops. This is me moving the stop. And this purple line is the VWAP, volume weighted average price. So what we have on this one is a regression line crossover on August 8th, 2013, using symbol VXX. It closed here about 1454. Gap opening on the downside, well outside of the floodplain. Starts marching its way back up. The ribbon reverses, enters the river. You can see the 10-period is rolling over and reversing. I buy it here in the middle of the floodplain after 1, 2, 3, 4 higher lows, and it looks like it may be going to close the gap. So I go ahead and buy this one. I put my stop down here. So 1442 is the entry with a 10-cent stop. About 1, 2, 3, 4 bars in, maybe 12 to 15 minutes later, it finds support at the bottom. River starts taking off. Around this time is when I move my stop to no lose. It gets through the Bollinger Band mean. I move my stop to 1450, so I'm at least about 0.8 R in hand on that one. The rest of the move up, it comes back to hold the Bollinger Band mean, takes off again, moves to the top of the river, top of the floodplain. See those two little things look like dragon horns to me. I decide to go ahead and put a second entry in at 1468. That's about 2.5 R in hand with momentum, and I'm thinking, well, it's cleared the close, so maybe it's going to take off, but in fact it doesn't. It just kind of mucks around outside the river in the floodplain and then starts to roll over and is now starting to penetrate back to the river, so I go ahead and take the exit at 1464, which nets out to about 1.5 R, so we gave back a little bit on the two positions. And then the regression line crossover happened shortly thereafter outside the river, and that suggests that a reasonable, not unreasonable move for price would be back to the Bollinger Band mean. There's some assorted trade frames and trades from August 9th. This one is this is CLF, Cliffs Natural Resources, a long-term favorite of mine. This is a sideways quiet channel. I had a nice move up in the morning. It gets into this sideways quiet channel now. Sideways quiet channel, what do we mean? Sideways, the slope of the river is flat. That's the red line. It's quiet. The Bollinger Band is narrow, so it's pinched. The river is narrow. and it's in a channel. That means price and both regression lines are inside the river. I buy the breakout here because of this upward move. Everything is pointing to up, so I want to buy the upside breakout, 23.50. A 20-cent stop puts it down below the floodplain down here and below this little swing low. It moves out smartly all the way through. I missed some re-entries in here. That would be a normal re-entry for me. But there are other things going on in the market. And then getting on towards the afternoon, we exit at 24.35 after this nice spike up, but it can't hold. It comes back to the edge of the river. That's enough for me. I'm going to cash it at 24.35 for a 4-hour move. Moving on to some trade frames in the volatility ETFs. On a 2-hour chart, which is what I like to use for swing trading over 30 days, I like to see those kinds of frames. I consider this to be an interesting moment in the swing cycle for XIV. It's had a really nice move all the way up from 22.5 to 29. Well outside the river, testing the outside of the floodplain. We get the regression line crossover here. It pulls back to the Bollinger Band mean like it ought to, or it's not surprising that it does. It holds, it reverses, now gets back up to the top of the river, but then it can't get any higher. Now it is pulled back on the second pullback here to the Bollinger Band mean. This is why this is so very interesting. This could be the pause that refreshes, and you could say this is a low and a higher low, and it held support at the Bollinger Band mean. And then if it gets through 29, it's going to really go. That's a trade frame that you could take. On the other hand, if it fails here below 28 or 27.90-ish, the next target is 27.25, and then the next support is at 25.75. And so then what we would see is a high, a sharp retracement, the biggest retracement in the last month, and then a lower high, and now we see the 30 and the 10 rolling over, and now the 90 is starting to get not as steep, and so that could be the start of the next leg down. So we're very well poised to see sharp moves in either direction. That's why this is an interesting time in that trade frame. If we shift now to the inverse and look at VXX now on a daily basis, the reason we're really interested in that one is because it's moved from 23.20 all the way down to 14, the big sell. And it got well out into the floodplain, but now for the last 5 days it's held support. The 30 is starting to roll over, the 10 is already rolled over, and we've got some pretty tight frames in here that we could use to start playing a reversal move. Even if you get a 50% retracement, it's all the way up to 18, and that's $6. That could be a 50% move in VXX, and that's why we'd be interested in that kind of a move. And I've identified a couple places where I would automatically want to enter at the green lines, and then purple lines to indicate where my upside targets are. The downside is easy to see that these kinds of moves can be followed by more of those kinds of moves. So if it rolls over here and rejects the south side of the river, then the downside is the play, and that makes this a very lucrative setup because you get high reward to risk ratios in both directions, provided you can remain agile. If we then shift down from daily into 2 hours, this is what that now looks like, and you can clearly see the low and the higher low finding support now at the bottom of the river here. That could be a support level if I want to buy the breakout above 14.60 or at $15 even. Either one of those allows me plenty of upside for a 2-to-1 reward to risk ratio, and I could play support here or support here depending on what we want to go with. So this is a very manageable swing trade. But again, failure here and then certainly a violation below 14. This could be another runaway move to the downside, in which case we'd shift over to XIV for the execution. On a 3-minute bar, this is what that last day's worth of trading looks like. Because we're willing to play the upside trade, this was that first spike up. See the dragon horns, and now it's pulled back. But it has found a higher low. The river has started to roll back up. This is a sideways quiet channel entry that can go here. I'm already interested in entries above 1465-ish and certainly above 1474. I already know that there's huge upside if this thing continues to go, so this has some good potential. August 9th, a trade frame in gold. This is now over to daily charts. The big sell-off, regression line crossover, nice move from outside the floodplain all the way back to the far side of the river. A nice 2-to-1 move from 117 to 130. Now it's pulled back in looks like it's holding support of the Bollinger Band mean, which is what you would expect if this is going to actually be a turning point. So we can actually now play with support from the Bollinger Band mean all the way up to the previous swing high. I may be able to trade 2-to-1 trades inside here. And then my sense is that if it gets above 130, this thing can really go. And then it'll at least get up to 137. And then that would be clear indication of a buy on dip opportunity here and a potential reversal. Here's a couple from this morning, August 12th, using what I'm calling the Z-score trade. It's in the flavor of it is the morning hook, and you'll see what I mean. So this is a clear example of the Z trade. So this is yesterday's close. These are all 3-minute charts. This was a great big gap down way outside of the floodplain. I get a spike down here, then a higher low and a higher high, higher low and a higher high, and now what we have is this sharp reversal happening, and you can see the ribbon is reversed. So I just buy this entry at when the ribbon re-enters the river, buy it at 57.90. You put a stop below the swing low of the ribbon. In this case, that's a 50-cent stop, and I'm playing for 2 targets: a reversion to the mean and the far side of the river. And if it gets to either one of those, I'm happy. In this case, it blasted right through. After my entry, it blasted right through my first target, marched all the way up to my second target pretty quickly. After that next move, to the Bollinger Band mean, I decide my normal practice is to quickly get to no lose plus dinner for 2. So I'm going to make some money on this one no matter what with my stop at 58.20. That's a 0.6 R. And then you can decide how you want to manage that exit, knowing that you're not going to lose any money on this trade. You can either be aggressive and follow the VWAP, or maybe parallel the 30 period regression line, or you might just play the downside of the river and see what it's going to do over here at the Bollinger Band mean. Either case, you're going to make money. This is the same trade, same day in XIV, the inverse volatility. Same entry, so a low, a higher low, a higher low. I buy it when it enters the river, enters the floodplain with a stop below the swing low. In this case, this is the usual 20-cent stop. Just manage it all the way up. After it finds support the second time, I move it up to about break even, and then start just tracking it with the 30-period regression line. Both of these trades unfold pretty well. The XIV trade continues to march at 2R in hand plus momentum and well outside of the river, and the river's starting to roll up. I buy my second position at 27.90, but it mucks around for about 15 minutes and starts to fail. When it gets back to break even on the second entry, I say, well, it's probably not there. It looks like it's fully valued, so I exit with 2R in hand. The TNA trade, which is the double Russell small caps, quickly get to no lose, as I showed before. I'm tracking below the Bollinger Band mean. It makes one more move up and then starts to fail. And this was about the same time the XIV trade failed. So we get out of this one at 58.90 on a 50-cent stop, and that's 2R. Shortly thereafter, we get after my exit here in XIV. This was the first 2R trade that we just looked at. It reversed and started to go up, pulls back, finds support at the river, starts to go up again. I have a low, a higher low, a second higher low, and it takes out the previous swing high. That's my universal entry. So I automatically re-enter that one at 28 even with a 20-cent initial stop, which is would be down here at the southern edge of the river. But it rolls over and starts failing. I go ahead and pull pitch on it and get out at 27.90 for a minus 0.5 R on that one. So net out of that trade in XIV, 1.5 R. So that's 3 days in the Tortoise trade room, demonstrating a variety of techniques in both directions and some opportunity trading. So keep your powder dry and your risk measured.